Welcome friends. So I'm here again with a new video, and in this video I'm going to explain what is breaker. Before going further, I would love to clear the topics first. What is breaker and when you will use the breaker, that is two different matter. Okay. In this video I will explain what is breaker so that you can identify easily if you see a breaker, because in my opinion breaker entry is high probable entry. But when you will use the breaker, I will explain that in other video, because if I would love to explain both of them in one video, it will be a longer video. I think 1 hour, 2 hour video, long video. Okay. So as you don't like longer video, I will just explain what is breaker in this video. And the very next video, I will explain when you will use breaker and how you will use the breaker. Before going further, if you are new, please don't forget to subscribe to my channel, and also don't forget to leave a thumbs up to me. Please, that's a request. Okay. Now, what is breaker? This is the general information. Every single person will talk about this thing. When market is going higher, it went lower little bit, it went higher above that high. When this low will be broken, then the lowest down close candle or the consecutive down close candle series, they will be your potential bearish breaker. Okay, market will come to that breaker level, then it will fall down. Okay, so here this should be your breaker. Now there is another rules over here. Market has to go above the old lows, old highs. So when market will go above the old highs and it will break the down, okay, between two high, the swing low, into that swing low, the lowest down close candle or the series of the down close candle, that will be breaker. When I will be in my chart, it will be more easier to understand. Just wait until I finish the drawing things over here. So that is actually potential bearish breaker. Now I will go for the bullish breaker. Market went low, it went little bit higher, it went lower. Between two this low, the swing high, the up close candle of that swing high, or the consecutive or the series of the up close candle, that will be your breaker. When market will go through that high, market will come back again to that breaker area and then go over there. Okay, now over here, the one up close candle or the series of the up close candle, that will be your potential bullish breaker. Here is the same thing. Market has to trade below the old lows. Okay, now this is the simple matter or simple concept about the breaker. Everyone will talk about this. I actually don't go with this. When I actually choose my breaker, I add something else. Okay? Now I will tell you, or I will give you the details about the bearish breaker, and you will think vice versa over here for the bullish breaker. I'm going to remove that one. Okay, the general rule is market has to trade above a old high. Okay, so there will be old high, I think something like this. Okay, so what happened actually, market has traded above that old high, then this is gonna be your potential breaker. For me, there should be something else. And what's that? I need a fair value gap over there. See, just I have to find out another fair value gap above the old high. If I have seen market has traded old fair value gap over here. Okay, this can't didn't trade fair value gap, that doesn't matter. But this high has to trade that fair value gap, and this is very important. Okay, this can't trade above the fair value gap. The body can't close above this fair value gap. The body has to close into that old fair value gap. Now it has to trade above that old high. It can be traded that fair value gap, that doesn't matter. Maybe it has traded the above the fair value gap, that is also doesn't matter. Until body close inside this fair value gap, I will continue use that fair value gap for marking my breaker, or for being eligible, being the breaker over here. Okay, all I need, body close inside that fair value gap for this swing or that swing. I need that. But if it went higher and if it failed to trade that high, it is not even eligible for the breaker, because it has to trade above a old high. I mean, yeah, over above a old high. Okay, so it has to trade above a old high and it has to trade a fair value gap. When it can do that, then that will be my potential breaker. This will be my breaker. So high, low, higher high, between two high, the swing low, the lowest down close candle, or the series of the down close candle, they will be my breaker. When market will break the lowest down close candle's lowest wick, it went through that, it will come back to that breaker again, boom, market will go lower. Okay, so this is the breaker. Now you will, if you just ask me, I mean, I think I should give you the example for the bullish breaker as well. So here market came lower, it went higher, it went lower, it went one more time higher. So between two low, this is the swing high. I will go for the one or the highest up close body, or the series of the up close bodies candle. Okay, price will come here, it will go higher. So there will be my breaker. I mean, just let me mark it. So that will be my bullish breaker. Price come here, it went through that breaker area, it come back again this breaker and it went higher. Now there can be little down, okay, something like this. It can go out of the breaker one more time, like over here. It can go above the breaker little bit, but that is the mohawk. And in that case, I would love to see only the wick, no body. Nobody can go above the breaker. If it goes above the breaker by body, then that is low probability for me. If you see, there is also a fair value gap that is kind of unicorn, but I don't want to go over there because I don't feel like that way, because if I got a fair value gap over there, that is actually perfectly the 22 YT model. I don't need the breaker in that case, so I don't go with that. Now that is actually extra confluences, but I am not talking about this. I'm just talking about this high. When this high will be eligible, or how this high will make this breaker eligible, or when this low will make that bullish breaker eligible for being a breaker. Okay, what is the rules here? That market has to trade above a old, sorry, not that one here. Market has to trade above a old high. Okay, so just for example, it has traded here. Okay, so it has traded above a old high over here. So this is the old, not old high, sorry, old low. It went below that I mean old low. When it went below the old low, this will be eligible for breaker, as or being a breaker, because this is the bullish breaker. If I say high, I'm sorry, it should be low. I mean, market has to trade below a old low. So when it will trade below a old low, that will be eligible for being a perfect, I mean, bullish breaker. This is the simple rule everyone will tell you, but I need something more over here. I need another fair value gap over here. Okay, so there has to be a fair value gap around that area where price has to trade that fair value gap. This fair value gap can be broken by wick, but body can't be closed below that fair value gap. Body can't close. Okay, body always tell you the story. So body has to close inside this fair value gap, and then when it will go higher above that high, between two low, this the swing high or the up close candle, that will be your bullish breaker. I know that it is little bit confusing, so please watch the video one more time. I guess you will understand what is actual breaker. Okay, this is actual breaker. If this high or this low fail to trade a fair value gap, there is no way I will think market will respect from that breaker. Or if this high fail to trade any fair value gap above the swing high, then I am not thinking this is going to work. I will think maybe it went lower to take the liquidity, then it will go higher again until it reach to a fair value gap. So this is the breaker, and in that breaker case, I don't need a fair value gap over here. Okay, I don't need a fair value gap over here. I just need the breaker. I don't need perfect fair value gap over here, because if I get a perfect fair value gap over here, that will be my 22 YT model. Same here, if I get a fair value gap, market has taken liquidity, market structure shift. There is my fair value gap, market has traded that fair value gap and went lower. I have already explained our well-known setup. If we see two fair value gap, three fair value gap, how we will trade that. I have already explained that. So if you were with me for long, you already know that. If you're new, you can watch the video from my playlist, Fair Value Gap Concept. You will get that. Okay. I guess it will be helpful for you. Now I'm going to my chart. So here is the chart, and this is from Wednesday, 17th January 2024. Okay. This is the PM session trade. I have outlined this trade beforehand to my Twitter. I have uploaded. So if you are with me in my Twitter, you already know that. Okay. So you can see market went lower. So low, high, lower, low. Remember? So this is the low, high, lower, low. The highest up close candle or the consecutive or the series of the up close candle will be your breaker. Market will go above that high. When it will come back again to this breaker area, here I'm going to mark the up close, highest up close body, and then boom, market went higher. So this is the breaker. Now what is the rule? This low has to trade below a old swing low. Now I will come here. You can see, I mean, this old swing low, okay? This is my old swing low. So it has traded below that old swing low. Now you can say, brother, it actually went below here. I mean, market went below that swing low over here. So why you are thinking this is below that swing low? This is old swing low, and market has traded over here. That's enough for me. When I got this breaker setup, I will go for the breaker. If you mark this one as your old swing low, you can mark it as well. There is nothing wrong with that. Okay. So this is not actually important for me. It has to trade below the old swing low. That is not important for me. But as ICT told that it has to trade below the old swing low, then I am just adding that with my concept. Okay. But the thing is, it has to trade a fair value gap. I would love to see this low can trade a fair value gap or not. So I will just go below here. Okay, so I got this fair value gap. This is a fair value gap. I would love to mark that fair value gap here. See, this low reach to this fair value gap. Now this is the last fair value gap. All of you know already how to use the last fair value gap. I am just explaining how precise the price action is when it comes to the last fair value gap. So if you are with me to my live, you already know it is too easy, the ICT concept. At the same time, just look at the swing low. This swing low has traded this fair value gap. Okay, this swing low, see, it has traded this fair value gap, but it went little bit of that fair value gap, but body, where the body closed inside this fair value gap. Just let me remove it. So it has traded the fair value gap, but the body closed inside the fair value gap. That means this fair value gap is valid for me. I am going to use that one over here one more time. Okay, so price went lower, high, lower, low. It reached to this area, to that fair value gap area, went higher. I got the highest body. That will be my breaker. Now I will explain this breaker. Okay, this is also the setup I was in live, and I explained this breaker, I mean, sorry, this setup beforehand. So this is also not hindsight. Okay, this is the morning session setup from Wednesday, January 2024. So I'm going to give you two setup or two things because I love to show you in live. Okay, not just pick uh, some level from my chart. I mean, some dates. See here, breaker work. Here, breaker. No, I don't like that things. But as I'm explaining the things by my video, so I can't show it to you by, yeah, I mean, in live. But if you are with me in my live, I have already shown so many times when the breaker happened. Okay, so I'm just explaining the things now. Where I got the breaker, market went higher, it went lower, it went higher one more time, it went lower. So I would, if I just mark this one, low, high, lower, low, market went higher. This is the breaker. So now the up close candle is over here, the highest up close candle. And as I told you, I'm just showing you two examples. The both consecutive or the series of the up close candle, that will be my breaker. Market come to this breaker, went higher. Okay. Now you can ask me, is there any breaker? Why I'm going to show it to you? Why not this one? You can see when market actually went lower, it has traded this fair value gap. Okay, look at this fair value gap. Very fine and very, I mean, just let me remove it. Okay, over here it went lower to that specific fair value gap, it went higher, that is my breaker, it is eligible for being a breaker, market went higher. But this is not a perfect breaker according to my rules, because this low didn't trade any fair value gap from 1 minute chart. When it failed to trade any fair value gap from 1 minute chart, though it has traded the 15-minute fair value gap, I showed you how to use the last fair value gap, but that is different concept. Because of the breaker, this is not valid for, according to my rules. This breaker is not valid. Instead of that, I will go with that breaker. Market went lower, higher, lower, low, between two low. This is the highest up close body or the consecutive or the series of the body. This will be my breaker. When market will go above that high, okay, above that breaker high, market come back again, you have to take your entry over there, and then market will went higher. Okay, now if you come over here, you will find the same thing over here as well. You can mark the breaker the way I have marked over there. I have just given you two example, and rest of all you will do it by yourself. So see you guys at 8:30. I'll be live today. If you would love to join, you can join. See you guys. Bye bye.